we will talk about option expiry cycle. And the reason we are talking about option expiry cycle is because as an option trader, we need to know about the option expiry cycle. And I will show you the reason why. So this webinar will last about 45 to 50 minutes. So the topic we will cover in today's session are these. You are not seeing my, can you see my screen now? Okay, so these are the topics we will cover. What is option expiration? What is option expiration cycle, and why we need to know option expiration cycle? So as an option trader, we must know option expiration cycle. And there are three types of options. I am sure as an option trader you know already, but I'll go through this topic also. And there are three types of option cycle. So this is the most important. What are those three types of option cycle? And what is modified option expiry cycle, and why they introduced modified option expiry cycle? And I'll give you some examples of option expiration cycle so that you can understand what I'm talking about. And you also need to know what happens after expiration date, which month in the option chain is added. So like for instance, April option expire and we see May. So what will happen? Will we see June or July or August? So what happens when the option expires on Friday? Which month is added? And then at the end, we will understand the option cycle for leaves. So if you trade leaves, you need to know this. And the last one is how to figure it out what cycle a stock is on. So if you're option trader and you're looking at the option chain, you need to know which cycle this stock option belongs to. So then if you know that, then you would know that, okay, after option is expired in suppose the April, this is the month which will be added. So if you know which month will be added, you can take proper action. Maybe you need to do some adjustment, or you need to know in advance which option you will sell against your long option, etc. So knowing in advance is important. All right. So these are the topics we will cover. So now let me do this. So now what is option expiration? Options have, so in order to understand what is option expiration, we need to understand that options have certain life. So all options have a certain life, 6 months, 1 year, 1 month, 1 week, all of them have certain life and they expire after, on the expiry date. So they are considered as a depreciating asset. So every day we are paying rent. When we trade options, we are paying the time value. It could be 1 cent a day, it could be 5 cents a day. It depends. And we know that option expires on a certain date. So all options have an expiry, and the dates are fixed. So once the option is assigned to a cycle and that month is added, then it has its own expiry date, and that date is fixed. So options belong to option cycle. So all options belong to option cycle, and there are three types of option cycle. So we will go through that. What are those three option cycle? All right. So now what is option cycle? That's the topic. So I try to explain through various ways. So let's look at this pattern of months in which option contracts expire. So there are certain patterns of months in a year where options expire. Some expire in the first month of the quarter. Some are expiring at the second month of the quarter. Some are expiring on the third month of the quarter. So it depends where the option is assigned. So they have a pattern. So try to understand this. They have a pattern of months in which option contracts expire, or in other words, expiration dates that apply to different series of options. So expiration dates. April has gone, so expiration dates May, maybe July, then maybe October, maybe December. So they have a certain dates. They belong to certain patterns of months. And this option cycles apply to stocks as well as index options. All right. So we'll go a little deeper. So why we need to know option expiration cycle? Why we are talking about this? And the reasons I try to narrate here. Trading options require strategies. So when you're trading options, you may be implementing various strategies. So if you're implementing a strategy such as suppose a vertical call spread, and you're long on a certain call, and then you sold against that the current month, and if you plan to sell another month in future, you need to know in advance which month will be available. So it just gives you a heads up that these are the months which will be available for me in future, or this is the month which I don't see in option chain right now, but as soon as this month option expire, then the particular month will be added to the option chain. So knowing this helps you. So, and you may need to adjust your trade. So if you know in advance which options month will be added, you can adjust your trade later. And knowing option expiration cycle, it increases your success rate as an option trader, and you don't trade in the dark. So knowing in advance helps you manage your trade properly. So anything, you don't want to be in the dark. So that's the key is. So now there are three types of options. This is a basic of options I'm trying to explain, and then we'll go deeper. So there are three types of options. We know that there are weekly options, expire every Friday. There are monthly options, expire on the third Friday of the month, and then there are quarterly options. All right. So what is a weekly option? So weekly options are not available for all stocks. There are only selected stocks have weekly options, and they get listed on Thursday and then expire on Friday. So they have like 7 days of trading. So listed on Thursday, expires next Friday. If you're trading weekly option, you have to be right fast. Otherwise, it expires quickly. Or you can use weekly option to sell against your long option. All right. So what is monthly option? So monthly option is the one we will be discussing in detail later. So monthly options is expiry is the last trading day of the third week. So the last trading day of the third week. So if last trading day is Friday generally, then it will expire on Friday. If Friday is holiday, then the option expires legally. They expire on Saturday, but you cannot trade on Friday, so it expires on Thursday. So the last trading day of the third week, this is the key. So it could be Thursday, it could be Friday. So you have to remember that. But legally, they expire on Saturday. Okay, but you cannot trade on Saturday. If Friday is holiday, you cannot trade. So Thursday is the last day. And quarterly option. So for some option, you will see quarterly option. I don't trade quarterly, but you would see in the option chain, and they are listed as quarterly option, and the last trading day is of every quarter. So whatever is the last trading day of the quarter, they expire on that day. So the quarter are March, June, September, and December. So there are 4 quarters for expiry. The last trading day of every quarter, whereas the monthly options have a monthly expiry, weekly option have weekly expiry, quarterly options have a quarterly expiry. All right. So far so good. And these are the basics concepts. So now our topic starts, option expiration cycle, from this slide. So please pay attention, and it can get complicated. If you don't pay attention, you will be lost, and then you wouldn't know what is going on. So I'll try to be slow from now onward. So each option has 4 expiration months. All options. You can open your option chain and you will find there are at least 4 expiration months listed. So what are those 4 expiration months? The current month, which is May now. So on Monday, you will see May as the current month, and then the subsequent month you will see as June. So current month and subsequent month, all options have these 2 months, current month and the subsequent month. So till yesterday, current month was April and May. So now suddenly things change. On Monday, you will see the current month as May and subsequent month is June. And then they add another additional 2 months. So 2 extra months are added to the option chain. So all option chain have current month and subsequent month. This is confirmed, right? Then we have 2 extra months. So which 2 extra months? That's the key. So which 2 extra months? This is what you need to know, which 2 extra months. So you know every option have a current month and the subsequent month, but which 2 extra months? Go figure. No, not really. There is a formula, and we can if we understand the formula, then we understand which 2 months. So understanding the option expiration cycle answers a big question: which 2 months? All right. So they came up with 3 option expiration cycle. When they were designing the option, they said, okay, we will have 3 option expiration cycle: January cycle, February cycle, and the March cycle. All right. So January cycle, February cycle, March cycle. All options have one of these 3 cycle, and behind each cycle is a detail. So we will go through each cycle. So when the new stock is listed in the stock exchange, and they decide that they will trade option, then they are randomly they are assigned a cycle. It could be suppose there are 3 new stocks getting listed for option trading. They can be randomly assigned like this. The stock A could be assigned to January cycle, stock B could be assigned to February, and stock C could be assigned to March cycle. So we know there are 3 cycles, and let's say there are 3 stocks getting listed for option trading. They could just assign randomly January, February, March. I'm sure there is a way. They must be following some logic or some track record or some history how to assign to which cycle. But let's assume this randomly they assign to January, February, March. All right. So now, what is January cycle? This is what we need to understand. So far we know there are 3 cycles: January cycle, February cycle, and March cycle. So what is January cycle? So this is the formula for January cycle. So we know January, we know first month of the year. So January, we know it's the first month of the year. So what they do, because January is the first month of the year, then they say, okay, we will have every first month of the second quarter, third quarter, and fourth quarter assigned to this stock. So 3 cycle, January, February, March, they are the first, second, and third month. And then they say, okay, we will assign first month of each quarter to that stocks. So whenever you will open the chain, you will see one of these 4 months to the in the option change having a January cycle. So if the stock belongs to January cycle, you will see these 4 months listed: January, April, July, and October. First month of the second quarter, first month of the third quarter, and first month of the fourth quarter. Okay. So for February cycle, logic says, because February is the second month of the year, so they assign second month of the second quarter, second month of the third quarter, and second month of the fourth quarter, which is February, May, August, and November. So every time, let's say you open an option chain and you see a month of August is listed, you should know that August is the second month of the quarter. So this stock option belongs to February cycle. So you can, in your mind, you can understand, you can figure it out that this is option belong to February cycle just by seeing August or November. Okay. So what is March cycle? Because March is the third month of the year, correct? So it will have, if the stock is assigned a March cycle, then it will have these 3 months: June, September, and December. June is the third month of the second quarter, September is the third month of the third quarter, and December is the third month of the fourth quarter. So every time you will, suppose you see September, you know it's a March cycle. If you see December, you know it's March cycle. Okay, so this is the formula, and we'll go a little deeper into it further. So now, we discussed option expiration cycle. We discussed that option expiration cycle, there are 3 cycles: January cycle, February cycle, and the March cycle, correct? So when they were designing the option, they came up with the cycle. At that time, they only had 3: January, February, March. But then they realized that they need to have 2 more months, because trader need for speculation purposes. Before, option was introduced as a investment, and then later they realized that options can be used as a speculation or hedging. So for the current month, so we need to introduce the current month also, and then the subsequent month also. So current month, if they only introduce current month and only 1 week is left or 1 day is left, then they cannot speculate. The traders cannot speculate. They said, okay, at least we will have another month added, subsequent month. So right now we are in the month of May, and let's say we were in the third week of April. If they only had current month of April, then only 1 week left. So that's the reason they added current month and subsequent month. So every option have current month, subsequent month, and 2 of the month from the option cycle. That's why in the beginning I mentioned here, if you look at this, I said each option has 4 expiration months. So current month, subsequent month, and 2 extra months. So 2 extra months come from option cycle, to which whatever cycle the stock belongs to. So for now, you would, if you open your stock chain, option chain, you will see month of May and month of June for all option. And then depending on the option cycle, you will see either July or August or September or November, December. So 2 more months you will see. But all option you will see May and June, starting Monday, and then 2 extra months. All right, so this current month and subsequent month are called modified because they added later. Okay, so let me go back to the, so modified option expiry cycle, current month and subsequent month. So why do we need modified option expiration cycle? As I explained, for speculation and hedging purposes. So most of the traders like me, I trade options for speculation purposes and sometimes hedging. So I need current month and next month. Okay, so there are 2 reasons for that. So now let me explain to you via example whatever we discussed just now. So I'll explain via various examples, and then I will show you when the option expires, what happens, what kind of month is added, which month will be added. So try to understand this slowly. I'll go a little slower. So let's say today's date is January 1st. Okay, so today is January 1st. And the option chain you are looking at, that stock belongs to January cycle. So we know there are 3 cycles: January, February, and March. So let's say this option belongs to January cycle. Okay. And we also know that there has to be 4 months for each option. We know that current month and the subsequent months are there, and then there are 2 additional months from option cycle. So which months we will see in the option chain? Because today is January 1st, so we will see January as the current month, and we will see February as the second subsequent month. So we know that. Now, which 2 other months we will see? So which 2 months we will see? We will see April and July. And why we will see April and July? Because the option belongs to January cycle. So January is the first month. So we will see the first month of the second quarter, and we will see the first month of the third quarter. So we will not see July, August, September, October. We will not see October or November or December. We only will see January, February, April, and July. Okay, so January and February are the current month and subsequent month, and April and July came because the option belongs to January cycle. All right. So whenever you open a chain, let's say you say, why it doesn't list March? I want to buy March. Because March is not listed, because it belongs to January cycle. Okay, so far so good. So let me explain further. So what happens when January expires? So what happens when January expires? So let's say today is the last day of January trading, third Friday, and the option expires. So available month, again, we know that there will be 4 months available, current month and subsequent month. So current month is February because January expires. So as soon as January expires, you will see March. They add March month as a subsequent month. Before, there was no March here because we were in January. We were on January 1st till the third Friday of January. We wouldn't see March month. We see January, February, and then jump to April, and then jump to July. But as soon as the third Friday occur and the Monday comes, we will see March, because we need to have a subsequent month. That's the logic. That's the formula they have. So current month becomes February from January, and then they add March, and then we still have April and July. So when you are trading in suppose February, after the expiry of the third Friday, January, you will see February, March, April. So then you wonder, how come I see now 3 continuous months, February, March, April, and July? So you say, okay, 3 continuous months, February, March, and July, and April. So sometimes you see there's no 3 consecutive months, sometimes you see 3 months, sometimes you don't see. So the reason is the option cycle. So it so happened January expired, February is listed as becomes current month, and then they add a new cycle, new month, which is March. And April and July was there before even January expired, because the cycle stock belongs to January cycle. So let me ask you this question. If you're looking at this option chain, I hope someone can answer. If you're looking at this option chain right now, and you see February, March, April, and July, can you tell which option cycle this stock belongs to? 5 seconds in a chat window. Can you answer here? Can you tell which option cycle this stock belongs to? Answer is on the screen. January, yes. So because option, yeah, answer is right on the screen. So if the answer is not on the screen, you can still tell that this option belongs to January cycle by looking at the third month of the option change. Don't look at the first month or the second month. Look at the third month. I will explain later more, but I'm trying to explain here. So look at the third month. So when you look at the third month, you say, third month, April. April is the first month of the second quarter. So first month, and January is the first month. So it belongs to January cycle. So that's the way you can figure it out fast to which cycle this stock belongs to. Okay. Okay. So you're alert. Okay. So next. So what happens when February expires? So let's say February expires. What happens? So let's go deeper. So option expiration cycle is January, right? We know that. We also know there are always 4 months available. So when February expires, month of March becomes the current month. Remember, March was the subsequent month before, and even before there was no March. So how it progressed? It was January, February, April, July. Then when January expires, we got March added as a subsequent month, right? And then when February expires, so when February expires, March becomes the current month, and the April, which was listed before, becomes the subsequent month, and July stays there. So now you will see October also, because they must have 2 months from the option expiration cycle. So then you will see October listed as in the option chain. So March becomes the current month, April becomes the subsequent month, July is the first month, and then they will add October. So now you will wonder, and this option change in January, when it was January, only I see only till July, right? And then sorry, and then in January expired, I still see July. And then when February expires, suddenly I see October. Why? What happened? Why I'm seeing October? So this is the reason. So if you backtrack, you will see, because February expires now, and we are March is the current month, and April becomes the subsequent month. So July, which was there already, become the first month of the third quarter. They need to add another month, which is first month of the fourth quarter. So October will be listed there. So knowing in advance which month will be added, let's say February is expiring, today is Friday, you know that on Monday I will see October listed. So in case you need to know in advance, so that you can adopt a strategy, whatever strategy you have, you know which month will be added in advance, October. So that's the reason you need to know option expiration cycle. So October will be added when February expires. Okay, so I took you from the beginning, January, then January expired, then February expired. So now, so if you understand the previous 4 slides, you understand the option expiration cycle. Now I will explain to you about the leap. So let's go through the leap. So the leap is a long-term. Leap is a short for long-term equity, anticipation, participation, security. So it's a long name: long-term equity, anticipation, participation, security. So not all stocks have leap. Leap, in other words, these are 1 year, 2 year, 3 year option. So you can, instead of buying stock, you can buy leap. For instance, in February, right now we are in the May, you can buy 2019 January or 2020 January option, long-term option, deep in the money, instead of buying calls, instead of buying shares, and then you can start selling shorter term options to collect the premium. That could be one of the strategy. So Leap have more than 4 expiration month. So they don't have just 4. All other options have 4 expiration month. Leap have more than 4. And they are issued, Leap are issued for 3 years, no more than 3 years. And usually trade with January month option expiration. So you will see for the Leap, you will see January as all of them have a January month expiration. And the last thing is, the months are added in the month of May, June, or July. So new months for option expiration, they add during these 3 months, and I will explain to you the logic. So May, June, or July, they add new months. So you have to remember May, June, or July. You have to remember that leap have January option expiry also. You have to remember it's a long-term option, so 2 years, 3 years. Okay. So now this is the I have prepared 3 examples. So let me explain one by one what you will see as the month progress, what you will see if the stock belongs to leap. Okay. So let's assume again option expiration cycle is January. Okay. And current date is May 2017. So we are in the month of, let's say, May of 2017, and option belongs to January cycle. So these are the months, 6 months will be listed for a stock option belonging to leap. So May is the current month. We know the formula. June is the subsequent month based on the modified expiry cycle formula. We know that because it belongs to January cycle. January is the first month, so we know July, first month of third quarter, and October as the first month of fourth quarter. So we know these 4 months we already know through previous discussion. So there's nothing new about this, right? The only thing new is the January 2000. You will see January 2018 also listed and January 2019 listed because the option is a leap option. It has that characteristic. So you will see 6 option months listed. So when you see like this, then you know when you see a longer term January listed, you know that it's a leap. Okay. And when you see more than 4 months, then you know it's a leap option. So not all the stocks have leap. So now what happens? We are in the month of May. So when the month of May expires, what would you see? So you won't see May anymore, right? So 1 month is gone. So you won't see May. So June will become the current month. We already know that. July becomes the subsequent month, right? We know that. So July was the first month. July will become the subsequent month. October is the first month of the fourth quarter. So it already listed October, right? First month of the fourth quarter. Now they need to list another month. We know the formula. So January 2018 is the first month of first quarter. So what happened? This become a standard option, and we had 2019. They will add 2020 as another month for June leave option 2020. Okay, so let's go through again. January cycle, May is the current month. May is the current month. June is the subsequent month. July, because the first month of the third quarter, January cycle. October is the first month of the fourth quarter, right? So these 4 months are the normal months. January 18 and January 19 will be the leap option month. But when May expires, then June will become the first month, current month. July this month will become the subsequent month. October is the first month of fourth quarter, it's fine. But then this month, because it's the first month of the quarter and the stock belongs to January cycle, this will turn into a standard option and 19 will remain there, 20 will be added. Okay. So far so good. Next example. Let's say option expiration cycle this option expiration cycle is March. So this is the answer for you, Albert. So option expiration cycle is March, and let's assume current date is May of 2017. So we apply the formula. May is the current month, June is the subsequent month, right? And the third, because it's the third month, so the third month of the third quarter is September. The third month of the fourth quarter is December. So we will see May, June, September, and December listed. But we will see additional 2 more months, January of 2018 and January of 2019. Okay. So now what happens after May expiry? So the scenario is March option expiration cycle. So what happens when May comes? So when May expires, June becomes the current month. July will be added as a subsequent month. Okay, here there is no July, but we need a subsequent month. So when June was the subsequent month, it becomes a current month. They add July as a subsequent month. Okay, and then September, December, January, and 18 and January 2019 it stays there. So we don't see any changes. We just see July is added in the middle. Okay, because we must have current month and subsequent month. That's the formula. Must have current month, subsequent month, and 2 more months. 2 more months. The only difference is the leap month, January 18 and January 2019. So leap have January month to them. Okay. Next example. So in this example, let's say again option expiration cycle is March, and now we are in June. So what happened? What we will see? So again, we apply the formula of 4 months. We will see June current month, July as subsequent month, and because the March cycle, we will see September and December because they belong to the third month of the third quarter and fourth quarter. And we will see 18 and 19 as leap option. So we see 6 months, right? 4 months and 6 months. So what happens after June expires? So when June expires, July become the current month, right? They will add August because we need subsequent month. So we need subsequent month. August will be added as a subsequent month. And we have September and December. It will remain as September and December 2017. Now what they do, because January of 2018 is so close, it's next month, they change it as a standard option. So now you will see 5 months because the closeness of January to December 2017. So because it's close back to back, so they make it as a standard option and then they add another year, January of 2020. So now you see 1, 2, 3, 4, 5, 6, 7 months listed for a leap option. So previously we were seeing 6, now we see 7 because of this December 2017 and January of 2018. They cannot, they say this is too close. So if they leave it like this, it's like December and then January and then 2019. There's no there's no distance. So they make it as a standard option and then they add another 1 year, 2020. So sometime you will see 7 months listed. But January is the when you see January of 2 years listed, you can tell that this is a leap option. Or if you see more than 4 months listed, you can and the January is there, this is a leap option. Okay, so you can figure it out by looking at that. You should figure it out which cycle it belongs to. All right. So all this you have to do that if you're trading options, etc. So now the $1 million question which I asked you before, and I will explain, is how to figure it out what cycle a stock is on. So if you're looking at the option chain, how you figure it out which cycle this belongs to. So this is the steps you need to take. I'm trying to explain. So if you follow this step, you can easily figure it out which stock cycle the stock belongs to. So you cannot tell by looking at the front 2 months, so current month and second month. You cannot look at those and tell the stock cycle. You have to look at the third month or the fourth month. So if suppose you see December is the third month, then you know December is the third month of the fourth quarter. So option expiration cycle is March. So you have to, I don't know about you, but sometimes I close my eyes when I'm trying to figure out. I close my eyes and then I go through the cycle, my calculation in my mind, and then I say, oh, okay, it's March. So that's the way I do. I just look up in the air, up in the sky, and then the answer comes to me when I look up in the sky, and the answer comes down. So this is the way you can figure it out. When you see December, then you close your eye, then you say, okay, December is the third month of the quarter, so it's March, right? So now there is an exception. There is always an exception to all these things we learn. So we need to learn the exception. So exception is the third month, January. So if you see January listed, it could be a leap month. It's maybe because of the leap. So look for the fourth month and then decide. So look at the fourth month because all options have fourth month listed, right? So look at the 4 month and then decide which option cycle the stock belongs to. So if you don't want to look at the third month or the fourth month, just go for the fourth month. So look at the fourth month and then you know which stock cycle the stock belongs to. So you eliminate this January thing, So don't have to worry January, oh, I need to go to the fourth month. Just look at the fourth month and then you will know which stock option, stock cycle the stock belongs to. Okay. So this is what I explained to you in the beginning. These are the topics we will cover. So these are the topics we covered. What is option expiration? What is option expiration cycle? So we understand the option expiration cycle, the patterns of months, like it could be January, it could be April, December. It depends on the option cycle. And why we need to know option expiration cycle, we discussed that. So we know in advance when the new month is added, so we can adopt our strategy. So we don't trade in the dark. And we also discussed 3 types of options, like weekly option, monthly option, quarterly option. They all have expiration cycles. And the 3 types of option cycles we discussed, right? January, February, March, 3 cycle. And then we discussed what is modified option expiry cycle. So modified, they came up with the modified option expiry cycle, the current month and the subsequent month, because they realized that the traders are trading for speculation and hedging purposes. So they need the current month also, and they need the next month. So they call it current and subsequent month. So all options have current month and the subsequent month, and then the 2 months from the option expiration cycle. And I showed you various examples of option expiration cycle and what happens after expiration date. So I showed you by example when the expiry date hits, a new month is added. So new month added depends on what is already there. Sometimes the immediate month is added. Sometimes the month is added at the end of the option chain. So it depends where is the month, where is the gap. And at the end, we explain the option cycle for leaps. Not all the stocks have leaps. Leaps months are added in the May, June, and July. All of them have a January, and the leap month can become a standard option, and then a new year is also added. So we went through that concept, and lastly, we discuss how to figure it out what cycle a stock is on. So just look at the 4th month of the option chain, and then you will know which option the stock belongs to, which cycle the stock belongs to. So this concludes this topic, and I prepared support and resistance for the market. So if you wait for a minute, I'll open that presentation and show you. Okay. Another one more thing. I have a 6-month coaching program which is going on. The next one will start in October. So if you're interested to know what it is, some of the students are already in this webinar. So you can send me an email, and then we will talk about it for 90 minutes. It used to be 25 minutes. Then I kept talking, and then I realized I talked for 90 minutes. So I spent 90 minutes explaining what this program is. So if you're interested, send me email. The email address is here, noshi@financialmarketswizard.com, and we will go from there. It's a 90-minute strategy session. We will go through the 6 month what this program is about, and I will help you in that 90 minute. I will help you solve at least one of your trading problem. Okay, so if you're interested knowing about it, send me email, and let me open another presentation, and I will show you the support and resistance I listed in the. I prepared the charts also, a lot of charts, but I don't have time because of this presentation. So just a second, and I open the other one. Yes. So usually I show the charts, but then I said, okay, I'll go through. So I'm going through, I discuss all this, I will discuss some other time. So all these charts I prepared, no time to discuss. I want to show you, okay, I can show you this Facebook. I showed you, and if you remember my last presentation, when the Facebook was going down, I explained to you about this hammer that Facebook has bottom at 149, 150, and everybody should be long, and I'm long in Facebook, and this is the way the Facebook has progressed. You see, so I'll show you in a slow motion kind of thing. So after this hammer is formed, look at the Facebook, how it progressed to the upside. It came down, it went up, it hit again, made another hammer. So hammer within a hammer, and positive. This is inverted hammer, another positive. This gap up, positive for Facebook. Then it tested the support, right? Then this is what happened on Friday. So Facebook is started from here, stands here. So Facebook is long. This is where they bought it, and I'm long. Let me show you some other charts. Microsoft. I want to show you the support and resistance. So let me go through. Wells Fargo. Wells Fargo was slammed with $2 billion fine. I went long on Wells Fargo based on this candle. So on Friday. So Wells Fargo is long. So if you want to buy Wells Fargo, support resistance charts. I'm going through the slide. Okay, here. So these are the support and resistance. I just wrote down the numbers. I was trying to give you another presentation, but then I switched to option expiration because people asked me, so I switched my presentation for today. So these are the support and resistance. I don't. If you want to write down, you can write it down. So markets are trapped between the support and resistance, and these are the support and resistance. I don't know if it will help you or not, but what I do every day, I go through the markets indices, and then I say, okay, what is the support and resistance, and I write it down on a paper and keep it in front of me. So during the market hours, I have it. I don't have to go through again and just look at it and compare, and then I say, okay, it is in between. So right now I'm fine. So these are the support and resistance levels. And if you have any questions about it, please send me email, and I will answer your questions. All right. And I do have a trial for my swing option service. It's only $17 for 2 weeks. If you're interested, send me email, and I will send you the PayPal link. And the next webinar will be on same time, Saturday, 8 a.m. Previously, I was holding a webinar on Sunday evening, 5 p.m. Pacific. For few times this month, I will hold at 8 a.m. in the morning, Saturday. And then I will switch it to Sunday, 5 p.m. Pacific. So thank you for coming. And whatever questions I couldn't answer, I will answer you through email. I have your email addresses. All right. Thank you for coming. Bye.